They lied. They lied. They lied. They lied. The Fed did not end QE as they said they would. But is anyone actually surprised? It seems to be a pattern, even if you look back over decades, that either one, they're wrong, or two, they just lie and they don't do what they say they're going to do. Hey, everybody, my name is JJ, watching Bull, Boom, Bear, Bust. It is Monday, April 18th, 2022. Let's get right into it right now. And we're going to kind of paint a bigger picture on what is to come with this economy, with this financial system, prices, you name it. We're going to talk about it. Let's get into it right now. They lied, yes, the FED. They lied. QE did not end. And let's take a look at a nice chart here that we are given out of this article. And this is out of Gains Pains Capital. We were told by the money men that the QE was going to end right about here, right about March 7th. But what happened? Well, $55 billion got pumped in to the system, to the banks since then. And what does that mean? Well, that means they're buying securities. Right as stocks begin to break down, someone suddenly panicked, bought the markets, forcing them higher. And then it turns out the Fed was actually expanding its balance sheet by this $55 billion over the same period. So now we know who the mystery buyer was. We were told that the Fed was going to end their bond buying in early March. And it continues as of right now. As I'm speaking to you right now, it's continuing. Even as of last week, the Fed bought $25 billion, that's billion with a B, of mortgage-backed securities. Mortgage-backed securities. All right, so all these people that said the Fed's going to come in, they're going to crash the markets, they're going to crash the housing market, you might want to rethink what you're saying, because it doesn't seem to be true based on what's actually happening right now. And we started calling this QE to infinity many years back, and it still looks that way. There's still no signs of them stopping. However, they are slowing down the purchases of these securities. They're not buying as much. But it is kind of a sign that they're not doing what they said they were going to do, and that was going to be stopping all buying of securities and bonds. Now, there's a recent article out of the Wall Street Journal, and it tells about how the Fed has failed over and over and over again. And the headline is, Hot Economy, Rising Inflation. The Fed has never successfully fixed a problem like this. So we're still going to see a lot of pain and even a collapse if they allow inflation to continue. If they allow inflation to continue, it's going to be a collapse of your purchasing power. We're already seeing that now. And we've already been seeing that regardless of what we're being told. We're being told by some mouths, and I'll leave it at that, some mouths are telling us that the inflation is because of the conflict happening over in Europe. But no, it started way before this. Inflation's been happening for many, many years. In fact, even the Fed over a year ago now was trying to tell everyone that the inflation that we've been seeing, well over a year, that it was transitory. And then they had to backtrack on that. They said, well, it's not transitory. And now the mouths are out there saying that this is because of the war. Well, we know it's not true, and we know it's just more lies. Now, I will give the Fed some credit here because they are allowing Treasury yields to rise, and that means higher mortgage rates. So there are some things happening. They're not stopping QE like they said they were, but there's definitely some things happening. Today we saw another over 1% increase in the 10-year Treasury yield at 2.8% right now. But let's take a look back historically at this 10-year yield. Typically, they always begin cutting shortly after they allow this rate to rise. And in fact, if we try to draw a trend line right here, we can get a pretty good idea of how soon the Fed may start cutting once again, because we're about at the point where, if we look back, if we look at the trend line, where they typically begin cutting. So even this rise in the 10-year yield that we're seeing right now is an anomaly compared to previous increases in this yield. And in fact, let's try to redraw this a little bit closer to the tops of these peaks. Right about there. So right now you can see that this is very unusual that this yield is allowed to rise this far and this fast. And if we take a look at mortgage rates, we know that mortgage rates very closely tracks or follows this 10-year yield. And if you look at this chart, you're going to see a similar pattern because this mortgage rate does very closely track the 10-year yield. And let's try to draw a trend line here at these peaks, and we see something very, very similar than we saw on that previous chart. That mortgage rates are rising much faster and much farther than previous increases. However, it's still low compared to the historic average, but the rate of the recent rise is definitely much faster than previous rate hikes and mortgage rate increases. And the big question out there on many people's minds, investors especially, is how long until the Fed reverses course on their rate hikes and their promises of rate hikes. How long until they start cutting? How much pain will be felt in the markets, the housing market, the stock market, etc., until they start cutting, until they increase their purchases of mortgage-backed securities. And now pretty soon I think they're going to have to start doing that if we see more red days in the markets. Now the stock market looks to be topping off as all this is happening. Let's take a look at a chart here. And today, why don't we take a look at the S&P 500? And I think you'll see that this appears to be, let me redraw this. This appears to be a topping pattern. But here's the thing, since this is completely manipulated, it may not be a top. All that has to happen is the reemergence of QE in bigger amounts, exceeding what was done previously, and for the Fed to resume cutting rates, or at least promising to cut rates. See, just the words that come out of their mouths can move the markets, because why? Investors know that these are not real markets, that the markets are completely dependent on QE to infinity, low rates, the money creators buying everything under the sun. And sadly, free markets died a long, long time ago when you have the money machine behind the scenes pulling the levers on the economy, on rates, and therefore also on values of the markets and even your home. So continue to brace, folks, because we don't know which way this is headed. If you know the exact direction and what the money creators are going to do, what levers they're going to pull, up or down, left, right, please let us know down in comments. Maybe we have some insiders here on this channel that have the inside scoop of the plans, of these people. Until then, thanks everybody for watching. Big love. Keep stacking. Bye for now. Peace.